Hey, what's up everyone? Welcome back. In today's video, we're going to take a look at the chart for GOAT. So quickly taking a look on our 4-hour chart here, you guys. Price is moving. There are a few things I want to cover at this video and something that I want you guys to take away if you are, following GOAT, if you are, have coins in there. I definitely have some coins in there as well. So we can have a bullish retest of our resistance level. But let's get into our indicators really quick. One of the bearish momentum that we are seeing is the close below our 20 moving average. So the white line here is 20, the orange one is 50. So the price we can already observe in the 4-hour chart is that we are closing below our 20 moving average. So this is going to be a key area of a retest of an area of resistance. And of course, if we do close below our 50 moving average, it does confirm the bearish momentum is going to continue, and we have closed up from the bullish trend going down to the bearish trend. Another thing that we want to observe as well is our Fibonacci chart. So this is an area that we can take a look at, areas where we can look for support and some resistance level as well. So we can see that the price again has bounced off really nicely on the 50 moving average as an area of support, and then again 20 moving average as an area of resistance. Now we could potentially see, if we are going to be closing below the 50 moving average, the next retracement level is going to be at 53 cents. And this is again an area to look for if the price is going to bounce off nicely and use this area as support. In the 4-hour chart, we don't really see a whole lot of support here, it being quite new for GOAT itself. So we don't know if this is going to be an area of support. Buyers may actually want to observe this area before going in. Now, another thing as well is taking a look at the RSI. We can see the RSI so far in this 4-hour is leaning towards up, but it can easily come down as well. The reason for that is the RSI is at 46%. It isn't considered as overbought. It isn't considered as oversold. Now, for the history, we can see at 41% and 41% that the RSI itself, or the price, has gone a good reversal. So we're able to see some support around 41, but that was only at crucial areas of support. So 41 here, it came down to the 50 moving average, found the support in the volume, bounced really nicely into an area of resistance. It could possibly happen here as well. We are at the same scenario. We're at the 50 moving average. We may see the price for the RSI bounce nicely up. And if we can take a look and observe the RSI here, we can also see that the RSI could potentially cross over our signal line. This area here is an area of confluence, an area of interest. If it does cross over our signal line, being the yellow line, then it does trigger more of a bullish momentum. Now, another thing, again, we can see huge sell-off in volume from an area of resistance. Now, if we do project at least a volume around 700K into today's 4-hour candle observed right here, we can potentially say that we are confidently going to close above the 50 moving average and then continue on and retest the 50 or the 20 moving average observed at the 67 cents. Now, one of the things that I do want to show you guys as a possibilities as a bullish momentum, a nice reversal here, is a hammer or a inverted hammer candlestick. And this is shown here. Now, it could be red, it could be green, but observed very nicely would be a green candle at the 50 moving average. This candlestick itself does show a lot of buying pressure, as the body in this 4-hour chart was heavily at the very top here. This does show buying pressure. Now, ideally, we would want the tail or the wick at the very bottom to be twice as long as this one. This is going to show us that buying pressure along with an area of support, showing us a more confirmed bullish signal. So if we do observe one of those hammer candles, ideally green with a higher wick than what we observed back at the example I showed you, we are most likely going to come up and retest the 67 cents. If that candlestick does not close like that and we don't close above the 50 moving average after that hammer candlestick, we are going to be rejected down to the 53 cents. So I am short-term bearish at the time right now. We do need to see those key signals such as closing above or closing below and seeing that area of support if it is a short-term bearish momentum. But that's my quick video here for you guys. Thanks so much for tuning in. Like and subscribe, and I'll see you guys in the next one. Bye.